Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I hope to have Mr. Z on the line here, but he hasn't called in as of yet. We're having a little bit of a sell-off in these markets. Those of you that are interested in numbers that we watch, keep an eye on the S&P here. We're going to have a 382 retracement up here at 26. You can post a chart. Well, the trouble is I have to go in and do something different. So bear with me here 1 second, folks. I've got to get back into the program and get the screen up, and we'll get ready to go here. There's where we go. I wanted to show you something that happened just recently here. There's a nice move in gold. Let's take a look here at the S&P here today. If you believe in these numbers, there's our low back here on the 11th, okay? We had this tremendous run up. Look where our low was today, folks. Spot on right there at the 382 retracement. So this market is still relatively bullish. I think we got Mr. Z in the room now. Okay, Mr. Z, how are you doing, my friend? John Cheverny, what can I do for you, buddy?
Hey, Larry, I'd like to ask you, please, to review what you're seeing in the daily chart for December corn futures, please.
You betcha. Just give me...
Once you do that and share with us what you think that chart is telling you, bigger picture, I've got a couple of things to share with you and your listeners regarding that market.
Okay, what I'm going to do now is I'm going to put up the daily chart, as you asked. We came down and we went almost to the 78% level here yesterday. Of course, we had the little pullback here, which we suggested that would probably be a buyer somewhere around 65. We're now 10 cents higher. As you can see on this chart here, we are completing an ABCD right now over 2 days. But with this strong thrust like this, one would assume that we're probably going to go higher. I have a bullish bias on all the grains, John, especially meal and wheat and corn and soybean oil, but it hasn't moved yet. But mainly seasonally related because, we're in the growing season and these patterns are saying we've got higher bottoms in here, so you've got to nibble at them at these prices. That's my 2 cents worth.
I appreciate that, Larry. Let me do this. As I'm speaking to you, I'm also going to share a couple of images in the Tiger's Den, so anybody listening on Tiger TV or in the Tiger's Den can reference what I have to say about this or what I have to share with you right there. Anyway, Larry, just for full disclosure, I took a core long position and found a low back March 1st or so. And it's not to say I waited till March 1st. I was playing the Tudor Jones deal, basically January and February, buying every low risk setup I could see on declines. I had probably 5 of them in January, February, where they were scratches, break evens, because the market kept on heading lower. So maybe after five attempts, I made a buy, and it turns out my 6th attempt at finding a bottom was it. We had, as you documented, from March 1st into mid-February, a beautiful, near exact AB equals CD rally pattern on that daily chart. And most recently, last week, when we made a low after declining, right after Memorial Day, we opened on that Monday night with a high, and then we're down 7 days straight. And I think you made note of it. I don't recall the low that occurred last week. I think it was Tuesday. The low near, I think it was 458 was an exact Fib 786 test. And now we're starting to bounce a bit. And like you, Larry, at this time of year, if we've declined, I'm doing nothing other than buying dips. And, every once in a while, every couple of years, we get weather snafus and nice bull markets where you make a big amount of money. And if we don't get weather snafus, I'm just satisfied with break evens, if you will, because like you, I'm no weatherman, and I don't know what she has in mind with the future weather. So that's the way that I play it. But what I wanted to share with you here is we may have a weather snafu developing, and it's not in the U.S. The U.S. is the conditions throughout the country. There's virtually no droughts. Planting has gone in on...
Hello? Oh, don't tell me I've lost her.
If we're going to get adverse weather in the U.S., it's in the future. It's not here now. Interestingly enough, however, what I've just done in the Tiger's Den is posted the growing areas in China for corn. And what I've just next is the current drought situation there in China. And what that shows is in one of the key growing areas for corn in China, weather is adverse right now. It really hasn't impacted U.S. prices. If it does, however, we could, we'll see it in the next couple of weeks, I would think. So I wanted just to alert you and your listeners to this idea that growing conditions in China are a bit unfavorable right now, and what unfavorable at present sometimes turns into truly adverse with sharply rising prices as a result. So wanted to share that with you.
John, we always like to hear what you have to say, and you've been spot on every year for the years that I've known you, which is quite a while. So I'm looking forward to the slightest bit of hot weather with very little rain will send these markets into a Fibonacci spiral to the upside, because the whole world is looking at everything except what to eat, and I think that's the thing to be watching at this time of the year.
Agree. Can't agree with you more.
All right, we'll be right back, folks. 877-927-6648.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I want to cover soybeans here. This is soybeans 30 minutes over the last 7 days, a week's action. This is what we were watching. You know, we had the report come in. We were looking at an ABCD down here at this level here, right around 1144. The low was 1141. It didn't quite make the 1140, but 1144 was the low. That was the buy point. The market rallied up, and now you see we're up in a pretty good move here. This is up 14 cents from, buying it just in yesterday. So that's acting pretty good. But let's show you one that's not acting very good. We fortunately got out of it, and that is the old Bondolis. Let's get this up on this hourly chart because they have exploded to the upside here, folks. We have taken out those highs. Let me just get those daily highs up here. 1 second. Move over here to the daily chart, and you'll see what I mean. You'll see we did go up and almost make that price objective of 2009. We made a little bit higher high here, but look at the Treasury notes, folks. This is the larger market of the two, and you'll see that it is very, very strong also. We'll get the daily chart up on that because you'll see here that we've gone up and almost, you can see we've gone above that number by quite a bit, which tells us that we've gone above the ABCD level right here. The only thing stopping it is right in here. So this is a big move. Remember, we sold that at the 382 on the bond. Let's get that out of the way. We'll show you on the bonds. We sold the bonds on the 382. Just get that up here to look at it. There's where we sold it right here. We got stopped out with a bad fill, and then the market rallied up. And I'm just looking at this right now. We've had a really strong trend. Oh, boy, I'll bet you a nickel to a donut that was a 382 retracement. What do you think, boys and girls? Johnny, get your placard up there, buddy. Oh, my goodness, look at this. Oh, within 2 ticks of the exact 382. And then, boom, away she went to the upside. And now we've made a 1.27 expansion in here. My idea of maybe being bearish these bonds may be a little bit, well, it certainly is because we took a loss the other day, but still going higher. We'll have to wait and see what happens with the rest of these. Okay, now we'll move on here. We've covered that. We've covered the corn market with John. We had a question. Someone asked me about Apple. Folks, Apple took off like a rocket ship. I'll show you a couple others that are very interesting in here. But let's take a quick look at Apple. Everybody likes to have that. And Get the daily up, and I believe, we're almost made a 1.618 expansion yesterday, folks. Up here at 122, we're a little bit lower right now, but see, this is where it was perfect right here. This swing right here we'll just draw it in, because this is when these things fail, folks. Get out of Dodge. That's all you can do. There's that swing. Took 33 trading days. There it was right there, 33 trading days. It backed off, and of course we were in the Apple meeting at that time, and it went from just exploded to the upside, almost to a 1.618 expansion, as you can see here, up at that level. All right, so that's what we're looking at in the Apple. All right, now someone's also asked me about Caterpillar. One second here, because we're in the growing season, we might as well look at Caterpillar and see what it's doing. It should be pretty strong. Oh my goodness, Caterpillar looks like these farmers are in a depression. I haven't even looked at this in a while. Here's Caterpillar, and it's coming down, making a Gartley here pretty soon. You can see the swings up here to the high. There's your ABCDs to the upside, and now this is a good chart to be looking at. Thank you for asking to see it. We're going to draw it in like this, and I am going to delete everything, and we're going to look at this from a good standpoint here. There's our low way back here, all right? We haven't had a good ABC. Well, we had one here. It was pretty good. A, B, C, D, had a nice rally. This is the major one right here. This is a really big one. There's your A, B, C, D right there. Look where it is right now, folks, today, setting exactly on the 382. However, when you look at this, you'll see that the ABC itself measures down to the 50% level down in here. So the fact that it made this low today at 321, it's up $4 from there. So that's a really good sign that this is held. But if you're looking at that 382, just like in the S&P, it hit it spot on. So that's what we're paying attention to here. So I hope that means something. Hold on a second. I think we have another lucky caller coming in. Hold on just a second, and that is Michael from Uber. I don't even know. Is Uber a listed stock, Michael?
Yeah, UBER.
Okay, UBER. Okay, hold on. Let me get this up here and take a look at it. What's the SI for? You got a bad position on or something? Okay.
I'm looking at the southbound. I'm betting it's going to go down.
Well, let's see. This is where we are right now.
It's part of the road transportation, the DJT.
Yeah, that looks terrible, yeah. Well, we completed yesterday. We completed a small ABCD in this yesterday. It went right up to the old number where it should have gone to, which was 73. Yeah. It's now $3 under that, taking out yesterday's low. Put your stop above 73, and I think you got a winner. That's what it looks like to me.
You have a downside projection?
Yep, just a second. I'll put it in right here, because if it makes another move down, it's at least is going to be 65. Is going to be your downside projection.
Okay, and how about 62 to 61?
Well, if it gets, of course, 62 would be a double bottom. 65 would be a 786. And we go below 62, you'd be looking at 60. But don't get too greedy, okay? You're only $3 ahead in the stock right now, so
I realize
just be patient.
Greed conquers all.
Yeah, this is correct. It certainly does, my friend. I hope that helps. Thank you, Michael, for calling in, my friend. Okay, let's move on here, and we'll take a look at another one, and we'll take a look. We had one more, and that was Tesla. Of course, Mr. Tesla has found out that he's going to get his $53 million salary, which I think he can be able to eat out a few nights a week on that, if I'm not mistaken. Let's get this up here, and we'll take a quick look at it right here. And, wow, it had a big jump today, but didn't do very much. Let's see where we had. This was the... Let's clean this out so we can see where it's really going here. And I'll delete everything here in this. Okay, this was some type of surprise announcement. Let's see if it went up to a legitimate number that we look at. And didn't quite make the 786. It missed it by, missed it by $1. Now we're $11 below that. So that might be or may or may not be something. We're going to have Jeff Huge as our guest here in just a minute, which is another minute or so. But let's take a look at this on the long-term weekly chart. On the problem is you've got this split, and that's the problem. This is what's been happening with Tesla, folks. It's been in a very strong downtrend for a very long time. This is not a bullish chart. You know, the fact that we went up and made the 78% level of the high we made back here on May 1st today may or may not mean something, but the fact that this stock is still up a little bit on the day or on the week, down on the day, but it's looking like it's still lower. Look at these lower tops in here. This is not a good sign. That's the way it appears from the cheap seats here. So that's what we're watching here. So let's pay attention. Let's move up here. And I think we've got Jeff coming on in about 30 seconds. By the way, I'm going to be doing the live trading tomorrow, folks, from 9 o'clock till 12. Hope you can join us. Should be a lot of fun. We'll be right back, folks, with Jeff Hughes of Alpha Insights.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're back with Jeff Hughes of Alpha Insights, and he has a chart up showing the U.S. recession appears imminent. It goes back 75 years. That's a long amount of data. What are you looking at here, Jeff?
Hey, Larry, how you doing? I'll tell you what I'm looking at here is the simple fact that I think a U.S. recession is very, very underestimated at this point. The bull case basically is for a soft landing, and I think that is a very consensus view at this point. But we've seen a fairly pronounced weakening in recent economic data, and that to me suggests that the U.S. economy may have actually peaked. And in fact, the U3 unemployment rate has actually risen from 3.4% about a year ago to 4% as of the most recent print. And if we look back to 1950, as this chart suggests, when the number of unemployed people increases year over year by greater than 10%, the U.S. economy has always been in a recession 100% of the time. What this chart is showing you is the 3-month moving average of that rate of change, and it crossed above the 10% line actually about 2 months ago. We're currently at 10.6%. So this model would suggest that the U.S. economy is already in recession. And in fact, if you look back to, as you point, 75 years of history, it's been correct on that measure 100% of the time. So I think there's a very high probability that, when the NBER looks back at the data, it calls the recession at the end of the first quarter of this year.
Mm-hmm. Okay, the next one's not a surprise to many people, but the bulls are abundant and the bears are absent. Boy, that's an easy chart to look at, isn't it?
Yeah, this is the Advisors Sentiment Survey. It's conducted by John Gray at Investors Intelligence. He's been doing this for about 35 years or so. The red line indicates the percent of advisors that are bullish. That's currently 60.3%. It's just slightly below the 3-year high of 62.5%, which we saw on April 2nd, which coincided with the March 28th peak. So we're now seeing a new intraday high yesterday in the S&P 500, and it looks to us that this, the bulls are peaking with that high. But I think what's more important is the bearish advisors. The percent of bearish advisors, which is the blue line, is now down to 17.6%. They're virtually absent at this point. Anytime it's below 20%, it's a pretty good chance or a pretty good bet that we are at or very, very near a major turning point in the S&P in terms of marking a top.
Well, we sure got a lot of news about everything going up there. Every time you see it's something about artificial intelligence. Oh, we're going into General Patton. We're going to be talking about the generals in charge of the infantry. Boy.
Yeah. The generals have definitely been leading the charge here, right, as the S&P made that intraday high yesterday, led by performances by Apple and Nvidia and Microsoft, all of which were very, very strong. The 3 largest companies in the U.S. market, all over $3 trillion now. I guess it's a day-to-day battle, whether it's Apple or Microsoft at the helm. But for purposes of this discussion, I think we really need to focus on the infantry, and that is the smaller companies behind those 3 generals. And what we're seeing right now is the advanced decline line in the S&P 500 has made some consistent lower highs as the generals have led the charge higher in price. And so the lack of confirmation by the AD line, I think, in the S&P 500 really raises some concerns about the sustainability of these highs. And I think supporting that is the fact that we've had new highs minus new lows, or net new highs in the S&P 500. Again, making a lower high in terms of its percentage, peaked up around 16%. It's now made a recent high of about 9% as the S&P has peaked at a higher high. And again, these negative divergences in that breadth measure are very, very important. One of my old mentors, Alan Shaw, would live and die by the AD line. That was the call for him. And when you see these types of divergences, it means, the days are numbered for this advance, put it that way.
Okay, the next one is the cost of hedging near record lows. Now, hedging positions that have stocks against options, is that what you mean?
Well, yeah, we're looking at the VIX here, right? And I guess the point of that headline is that, we're down just around 12% or so at the recent lows. And if you look at where interest rates are today, the cost of actually buying a put option on the S&P 500 is near its all-time record lows. What I would point out here is that the volatility of volatility, or the VVIX, the lower frame chart, has actually made a higher low as the VIX itself made a lower low. Typically what we see when we have that type of a divergence, a positive divergence in the VVIX, is it's indicative of a reversal in volatility itself. And so I think you got this big exhaustion gap yesterday, which was punctuated by a shooting star candle line. And I think if today or tomorrow we see that gap closed, it will be a confirmation that that was indeed an exhaustion gap and the end of this final move up in the S&P 500. And I think we should see a surge in VIX and a decline in the S&P, in the subsequent days and weeks.
Okay, God, this is really good stuff here. Your stock picks have been really good. I was going through your summary of what you've done here. Boy, you caught some of these big moves on the upside, so congratulations to you. That's really pretty good. I mean, I was really impressed, Jeff. So
Thank you.
Put a feather in your cap. I see here the next one is this S&P 500. It looks like it. I can see that island reversal that possibly that is there, but boy, these markets they're not unvolatile. Let's put it that way. And I've always said that this is going to be the year of volatility. And boy, that move that we had on Tuesday was really, really surprising to me. The fact that it could go 100 handles in about 2.5 hours. Boy, everybody that bought that stuff for the last 2 days might not be looking so good if it closes below 5,400, would it?
No, and as you know, we apply the Elliott Wave principle oftentimes to try and figure out where we are in the advance. And we've got a bigger picture view of the market that we're not going to really dig right into here. But what I would tell you is if we're looking at how we've advanced off that October 27th low last year, it looks to us that we are very nearly complete, if we haven't already topped yesterday, with 5 waves up at multiple degrees of trend. And, where we might be wrong about this is that this might have actually just been a B wave, and that, the decline into the April 19th low was actually just an A, B, C. We've got one more leg to the downside there. But at the end of the day, the next move is down.
Okay. Stay with us, Jeff. We got another segment coming up. Jeff Hughes of Alpha Insights, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're on with Jeff Hughes of Alpha Insights, and we're going to be talking about the Elliott Wave analysis. Could you please continue, Jeffrey?
Absolutely. So, as I mentioned, we've got a bigger picture view, and I wanted to share that with the audience here. We've got 2 potential counts that have developed here. On the left-hand side of this chart, we see the preferred count. The preferred count suggests that we're topping at least cycle degree of trend, if not super cycle degree of trend. And if, in fact, that's the case, we probably would see a fairly sharp decline that would take out the prior 2022 highs at around 48.18, which would be confirmatory of that. So quite a ways down before we get confirmation. But we think that that's a real possibility here, especially if we're correct about our assumptions about a recession. Alternatively, if the soft landing were to play out, we think we're just probably going to see another pullback here and bottom out somewhere above that 48.18 level, that 2022 high, which would probably be minor wave 4 of intermediate wave 3 up, which would be a big setup for the next leg higher, which could carry the market probably to around 5,500, 5,535 is our max upside target for intermediate wave 3. And so we've got a preferred count that's bearish, an alt count that's bullish, and we'll just kind of have to see how it plays out. But in either case, we're looking for a decline back down to test that 48.18 level.
Okay, that's good. Okay, the next one is Nvidia. Oh my goodness, you're calling for a top in Nvidia? Shut the front door and raise the rent. We found somebody. Go ahead.
I think it's a worthwhile question to ask here. And if you take a look at my Twitter feed, you'll see our very, very short-term version of the Elliott Wave count. We've counted up 5 waves at multiple degrees of trend, just looking at that past month's move higher. So, this actually is a chart that takes us back to October of 2022, and we're counting 5 waves up at intermediate degree, and that final intermediate wave 5 subdivided pretty nicely at minor degree of trend. And, this other chart that I'm mentioning on our Twitter feed is actually taking a look at minor wave 5 up solely and seeing the subdivisions there. And it really looks like we are in the absolute final movement to the upside. And you can see there's a big negative divergence here in momentum, also in volume. So we're seeing waning demand as the Nvidia makes higher highs here. And I think once Nvidia tops, it'll be concomitant with the S&P 500 topping. This has really been a force of one. Nvidia has driven the market. It's responsible for almost 50% of the S&P 500's year-to-date gains.
Well, this is a split stock now. It's 128. It was 1,280. Is that correct?
That's correct.
Okay, yeah, because I did, I know nothing about stocks other than they're traded differently than futures. And here we have bonds breaking out, and they sure are today. What do you think? We're looking at lower interest rates, Jeff?
Yeah, this is a pretty short-term chart going back just to around the beginning of the year. We're looking at daily bars here, and we've identified a classic pattern base formation of the cup and handle variety. The breakout above 92.5, if sustained, projects a measured move to about 96, then 98. We think today's price action really supports that. You're seeing a little follow through here. We'd also point out the bottom frame shows that we're seeing the relative strength of bonds versus stocks improve. So this is interesting because if stocks break down, where is that money going to rotate? We think it's going to rotate into bonds. And we think if there is a recession, historically speaking, the best performing asset class during a recession is T-bonds, long duration, risk-free government bonds, which will pay you right now, 4.5%. And you've got a total return opportunity that could be close to, say, 15% or more.
Wow. Okay, let's tell the folks how they can reach you, Jeff. You got a monthly newsletter that's knock your socks off great, folks. That's all I can tell you. It's really good.
That's right. We've been publishing our monthly newsletter on Substack for about 3 years now. It's affectionately entitled Huge Insights, The Big Picture. You can find it at hugeinsights.substack.com. Therein, we kind of touch on all of the big picture macro economic data and lay out our market forecast for people that are interested in our views. And so check that out. The next publication is actually due out July 6th.
Okay, that's good. And I'll put your contact information up here so they can all see it. Just tell them what your website, Twitter, and Substack logos are.
You can find me on my website at www.jwhinvestment.com. You can follow me on Twitter or X at alpha_insights. And again, my Substack handle is hugeinsights.substack.com. Take a look.
Yeah, it's very good. Hey, listen, keep those cards and letters coming in, folks, because you've really got some great stuff, Jeff. I really mean that sincerely. And I've been around a long time, and I don't say that lightly. So keep up the good work, my friend.
Thank you, Larry. Have a great day. Thanks for having me on the show.
My pleasure. Jeff Hughes of Alpha Insights, folks. Okay, let's get back and take a look at some of these markets. We got a couple of minutes here to go, and we'll see what's going on here. Let's see. We got the go. What's going on here? Let's take a look here. Okay, there's what we were talking about just before. We thought that the NASDAQ was going to rally up to that level that we thought it was going to, which it did. Those moves were exactly equal. You can see that one and that one. The key part about this, folks, I mean this really sincerely. If you look at this on the long-term weekly, I did a lot of work on this last night. We look at this giant ABCD pattern. Now, this is, believe me, it's one day, and it doesn't mean diddly squat unless it turns around and goes a lot lower. But there was your ABCD. The target measured to 19,663, and the high was 19,672. So it came pretty much spot on, to what it was supposed to be. So may or may not mean something. I'm not sure, but by gosh, it's acting like it wants to do something like this anyway. One of the stocks that was in that, I want to bring that up and show you yesterday, because that was the reason last night that the thing was up. AVG, it's Avco, it's Broadcom. Where is it at here? There it is. This is the stock that made the thing go wacko last night. You can see the gap up where we had a 100-point gap in the E-mini NASDAQ just because of this stock right here. And that's a heck of a move. It measures to 1845. Last night we hit a high of 1713. So the thing is, if you belong to the service, we were saying buy call options right here the day before and then sell them when they have a big run up like this. And if you believe that, I still have 2 shares of the Brooklyn Bridge available for sale. I have the number of stocks I've done, folks. My first stock that I ever bought was Elastic Stopnut, ESN. That was 1959. I made $200. 877-927-6648. We'll be right back with you after these cards and letters coming in. Hold on.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I put a chart up here, 8-minute chart of the gold. We're going to be day trading gold tomorrow. This is when we start, which is right there, 9 o'clock my time. And as you'll notice here, as you go through here, look at this beautiful pattern that we just made here in this beautiful pattern right in there. Look at this, right? Absolutely perfect. Where did it go? Right exactly to the 382 right in there, folks. Now, that's not a bad move, a good one. This is what we like to see. But we'll be doing some of these types of trades tomorrow. So it's from 9 o'clock in the morning till 12 o'clock noon, New York time. And we've been relatively successful over the past ones. This will be our 9th one that we've done. We'll doing one here on the 14th. And then we're going to be also doing one on the 28th of June. We do 2 a month. And we have a nice crowd in there. A lot of people have, resubscribe every month because we've been successful making money. Thank God it wasn't yesterday, folks, because they tacked me to the wall. But fortunately, the wall was very low hanging on the first floor. We got out with our skin, and we got all our skin back, and we got the wallpaper back and a few shekels in our pocket today. So that's what it makes our thing. You never two things when you're trading, folks. You got to remember Mark Douglas says, use the Fort Worth strategy. And I said, what the hell is that? And he said, F for never having any fear, and W for never having to worry. Because if you put a stop in, that takes care of both of them. Because if you don't do that, Fort Worth is just a stone's throw away from the poorhouse if you don't do that. So remind yourself of that, folks. Very, very important as we're looking at these things here today. So live every day in an attitude of gratitude, and may God bless. And I have 41 seconds left, so I'm going to give you another 39 seconds of commercial. One of the other ones that we're watching here is the, hold on a second here. Beans continue to go higher. We're up now 14 cents now on the beans today, which is a really nice move. See from 42 where we are right now. Well, it's actually 16 cents. We'll see you on the flip side tomorrow if you can, folks, 9 to 12. May God bless.